So what is a balance sheet, right? It's one of the financial statements that you are going to use. So this is an example financial statement. It includes most normal usage items. In the asset, you can see in the total is 22,075. And in the last item, you can see a total liability and equity is also 22,075. So the concept here is asset equal liability plus equity. So no matter how liability or equity change, the equations always be the same. So this is the examples with more realistic number, but they is still the same. Now that we understand that balance sheet is just an equation, asset equal liability plus equity. Now let's see what is asset about. So there's 3 ways to classify or identify an asset. You can classify it as a conversion, usage, or if it's physical. So let's say if it's physical, right? So a tangible asset is something that you can touch, something like inventory that you can touch is physical. And intangible is something like copyright, patent. It's still asset, but it's just paperwork that exists, but you can't touch it technically. Or you can classify it as a usage. So are you going to use this to make it money, or this is an asset that you put away and it doesn't matter if about your business activity. Things like investment, and it's an asset, but since you are not using it to make money, so therefore it's non-operating asset. Or example like operating asset on a landscape business, you can use an excavator or any tools that are about in constructions. Those are stuff that you are going to use are operating asset. Also, you can classify it as a conversions. It's like is the assets are going to be converted in cash within 1 year or not. If it's within 1 year, that's going to be a current asset. If it's not, that's a non-current asset. We also have liability on our balance sheets. So a liability is something that we need to pay back. Let's say I bought something from a vendor and I need to pay that back within 30 days, right? So that is a liability. And that can be seen as a account payables or notes payables or anything that need to be paid back. That is a liability. Also, you have non-current liability asset. So you still need to pay it back, even though you can pay it back in more than 1 year. That will be a long term. If you took out a loan for like 10 years, let's say it's a lump sum at the end of the year, and that will be a non-current liability. And what is equity, right? And equity, when you see in a balance sheet, hypothetically speaking, today you go bankrupt, and how many can I claim? How much money can I get back from the business? So that's the equity's meaning. So it's normally is out from the money that have you put. It's called contribute capital, or the net profit that you have been accumulated from the past year of operating your business is called retained earning. That's the total owner equity. So in summary, assets are the stuff that is under the company names. It can either be current asset or long-term asset, and liability are the stuff that you need to pay back as a company, and equity is like how much of asset you can claim in case of you go bankrupt, right? Because they pay the vendor or liability or credit card first.